first of all, what happened in the news? Not much. I mean, we got our consumer price index, right? That's our retail inflation. Retail inflation was a little bit hotter. So people that came out yesterday. People were a little bit tepid to that. We saw the market kind of stall yesterday. Today we had producers price index. That's usually not a big market mover. That's wholesale inflation. Wholesale inflation came in, also a little bit, moderating there. Nothing special. I did comb through the Fed meeting minutes. So on Wednesday, they released the Fed meeting minutes for the previous Fed meeting. The previous Fed meeting, there was a lot of discussions, which I think is really, where you want the Fed to be. It looks like by the end of the conclusion, it was almost split half between the Fed presidents on what they wanted to do. But, you know, in my mind, we had this period of, deflation after the pandemic or trying to control the pandemic. So the Fed took action. And then the whole story has been controlling inflation until like, the last couple of months where it's started to, bring back into the fray the employment conversation. I almost feel like you want the Fed every time they meet to be discussing and really having a good conversation, at that balancing point of, keeping full employment and keeping inflation under control. That means that we're kind of at that tipping point that's good. So, I'm not sure what the market folks are thinking. When I look at my technicals, if we change, remember last week, Sip, I gave everybody a little hint on how to use the MACD indicator to really be able to look at those moving average crossings closer. You could actually hack the MACD indicator. Well, we've got these false reversals that we got, and they even had us thinking that the market had topped. But, one of the things when I look for a confirmation of a reversal is not only that we don't, for one day touch and then go back across the moving average, but also kind of the magnitude of the crossing. Like if I was to look at this in retrospect, right? This would be a crossing to me. This would be a crossing to me. This guy over here would not. This would. This would not. This is like a little like false, right? You need to have a crossing across your moving average. This would be something I would look at, but this little guy over here, maybe not so much, right? And so this whole little thing that we had last week was just a whole bunch of like false signals as far as I'm concerned. In other words, let me change my drawing a little bit about my broad market here. If I go over here and take a look at this, and I also shut off this indicator now that we know which confirming indicators we're paying attention to and which ones we're ignoring, we're kind of back into the fray. And it's giving me more confidence that the market is comfortable where we at, with maybe like a couple more quarter point rate drops through the rest of the year, one in November, one in December. And that's, if we look at the CME in a little bit, that's where it looks like the CME market indicator is at. I was a little bit concerned that we were getting a reversal before we hit this ascending line of resistance. But, with these false signals, we're actually going higher. And I actually might, sign on board. I'm not there yet, Sip, but I might sign on board with the market moving things higher, right? The uptrend continuing. I'm still in the camp of waiting to see maturity. I want to go through this earnings season, but I'm cautiously optimistic for the broad market to get into another uptrend again. A couple caveats though. If I take a look at the VIX, I mean the VIX is above that median, all-time median. That's telling me that although that I'm not the only one cautiously optimistic. I'm seeing folks really put a lot of investment into options as hedges, meaning they're protecting themselves should their cautious optimistic turn against them. So that's something to pay attention to as well.